we talk about Bitcoin being the perfect money, and it is. It is certainly a better money than gold. Gold really can't function as a money today. It's appreciating well. It's a decent place to store your money. But
Almost 100% of the investment memos that we write within 365 days are completely irrelevant because the founders have changed or pivoted or tweaked who their customer is or what their product is doing. The game board is just changing so fast.
so my concern with nihilism is the youth, they give up before they even try. Take the damn hill, earn the money, keep it in Bitcoin, and live your life.
Your hurdle rate with Bitcoin is a 60% CAGR asset.
Welcome back to the Orange Peel Podcast. I'm your host, Nicki, and today I've got something so special for you guys. Today, we're going to be peeling back heavy layers of Bitcoin with two excited, very special guests that I'm honestly so hyped to bring together for you today. Our first guest is Cam Doody, and he's a venture capitalist who's reinventing the game completely with Brickyard, which is a fund for the maniacs. It's for the founders who go all in. Our second guest is Josh McNeil, and he's a retired Bitcoiner, a longtime Bitcoiner who's lived through all the cycles and now focuses on Bitcoin families and how Gen Z can adopt Bitcoin in real life. We're going to be talking money printing, AI, deflation, venture capitalism, and basically what it all means, what Bitcoin means for students like you and I who are just trying to piece together what our jobs, money, and our financial futures are going to look like. Thank you guys so much for coming on. I'm so excited to have you here today. Let's get into it.
Let's do it.
Let's go.
So why don't y'all start us off by telling us how you got into Bitcoin in the first place?
I was in an extreme job running a company. We were going through tariff supply chain issues. And I was trying to just find a way to protect my wealth and my family. And I found myself having to be I had to spend, while having this all you can eat job, I had to spend 25% of my time trying to figure out how to curate my wealth. And then I'd heard about Bitcoin, and then it sort of required me to be frustrated about everything else. I had tried stock investing, the indexes. I'd done a lot of private investing. I had worked on startups. I had consulted boards. I tried all kinds of ways to get an inside to make money, or to at least curate the money that I had made before. And then once I realized that Bitcoin was the answer, obviously you don't know it immediately, but then you go down that rabbit hole. And so this is sort of a culmination of the challenges at work and the frustration in traditional finance led me to Bitcoin. And when I found it, I went all in, sort of on the education front. And then I went all in financially.
That's awesome. Cam, what about you?
Well, I started a company a few years after college called Bellhop. And one of our first engineers, this was 2013, had bought $1,000 of Bitcoin at 11 cents a coin. And even at this time in 2013, I guess that was back in 2009 or 10. And, he sold at 90 cents. And so that was like the running joke around the office that, he'd given up, like 50 grand or something like that. And, because anybody, you go up 9x, if you don't really understand something, it's so difficult, to not just take your gains and treat it like the casino and say, hey, I won on this one, whatever. And so that was the first time that I'd ever heard about Bitcoin. And one of our friends that was in San Francisco started another company. We were hanging out, and he said, you should probably just take some money and park it in this thing just in case. And so I did, in a small amount. This was like 2015. I think Bitcoin was like 250 or $300. I was super busy building our company, and so I really didn't have the time to really go through the paces of understanding the asset. I just kind of bought it, held it, and I was focused on other things. And as these cycles do, anytime there's a big run up in price, well, all of a sudden you're paying attention to it again. And so in the, in the 17 run up, it was the talk around the office, and I had Bitcoin and I was excited, and I still didn't really understand, proof of work, for example. I was dabbling in, altcoins, in the 2017, time frame, just because it was like the poly market of 2017, and thankfully never sold any of my Bitcoin that I bought, in a couple of years earlier. But it started getting my mind thinking about decentralization, what the world could look like, and what money really is, and starting to learn about the Fed. And it was kind of like this thing on the, the back burner. My life was just very busy, and I had way too many things to think about, outside of this, this side thing. But when we sold our company in late 2019, the Dow was at 30,000. It felt like we were 12 years into a bull market since the financial crisis back in 2008. There hadn't really been a correction. And I was sitting on cash, and it just felt like I just needed to sit on it. And, I got some advice from a mentor of mine that said, probably the best thing that you could do if you ever come into any money is not do anything for like a year at least. Because folks come out of the woodwork. They know that, oh, so-and-so had a liquidity event. Everybody, comes out of the woodwork and starts shaking you down for their real estate project or this or that. And so I just kind of sat back. But I did decide to make an allocation when, like right after COVID, when everything dumped and the Dow went from 30 down to 18, and started entering the market in equities. And I put a pretty decent chunk in Bitcoin. It was like 10% of my liquid assets. And then during that first cycle, it ended up becoming like 50+% of my assets. And I had this like deep anxiety of like, oh my God, I'm overweight in this thing that I don't really deeply understand. And I turned into this neurotic person, and I started driving, I started DMing, some of the OGs in Bitcoin, just begging like, hey, listen, can I have an hour of your time? And I'm a private pilot. So I started like flying to different cities and sitting down for these like 1 hour meetings with folks that were just gracious enough to help me to start to understand the thing. I started listening to every podcast, read every book. I didn't have a job at this time. And so I was like, I had the time to actually do the work. And all that happened was my conviction, I couldn't defeat it. I couldn't, I started answering all of those deep questions about why Bitcoin is this inevitable thing, and why it is good for the world. And so I naturally started mixing out of equities and everything else. And, it went from 50 to 60 to 70 to 80. And, and by 2022, it was 100% of my, liquid assets. And I've been on a Bitcoin standard ever since. And I've seen it play out in my life. Like my capital allocation behaviors have changed now that I know that I have real money. The things that I normally would have spent these expiring credit card points on, I'm like, maybe I don't need that, that new car, or that, that whatever. And it's forced me and my wife to be better fiduciaries. And I've seen it's changed my life. And now, I started a venture fund called Brickyard. But I'd say, probably 50% of my time is actually spent thinking about Bitcoin, thinking about a world of, what does it actually look like when these super deflationary companies that we're investing in on the venture side are actually pouring into a finite money, as opposed to a money that is designed to inflate, to offset the deflation that the free market creates. And so it's like fiat is like robbing us of all of the gains that we should be experiencing with these super productive new technologies. And largely, the venture space is just totally missing this thing because they're focused on the 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 production vehicles, like the companies that are actually creating new technology. They're not thinking at all about like where does that energy go? It doesn't matter how much electricity you're creating if your battery is leaking every year. And so it's like Bitcoin and AI are two sides of the same coin. And they're mutually beneficial to each other. And I think that idea has taken over my pretty much all of my thoughts professionally.
And
Yeah, I
Nicki, I
mean,
think the a common thread between Cam and I is we both, through different means, found this window of time. Him selling his business, me exiting the consumer products world. We both had this 2 year window where where we had extreme time. And I think Gen Z, if they are good time allocators, can find time now much better than they'll be able to find time when they enter the workplace. I know when I started my career, I know when Cam started his career, there was absolutely no time for this kind of thing. We were having babies, we were getting married, we were going to weddings, and we were drinking from a fire hose trying to understand our industries. So I think that the younger you are, if you can focus on your time, and as Michael Saylor says, we're going to spend 50,000 hours of our lives studying, then earning to make fiat money. Why can't we spend 100 hours to learn what money is, what Bitcoin is? And I just believe, I have two daughters, as you know, about your age, um, and it's gospel in our house. You've got to learn this now before your life gets too crazy.
that's a great note, and I want to go a bit deeper into that. So, if let's zoom in a bit on Gen Z specifically. If you could go and explain Bitcoin to someone who is Gen Z right now, how would you go about doing that?
Well, I would start with, as you had Joe Bryan on the show, as you know, it's what is the problem? And until you realize there's a problem, why the hell do you have to do this work? Um, and so I think Gen Z feels this acutely. I think Gen Z is concerned about the job market. I think they're concerned about when are they going to be able to buy a home, afford a family. And so I think I think the problem is on your doorstep as a Gen Z. And then once you understand the problem, and I think many Gen Z acknowledge it and understand the world they're entering, then you go to the traditional finance world is not built for you. There's clearly a reason you have this problem. You have this problem because of the fiat money printer and those people, the Cantillon effect, those people closest to that money printer are making all the money. So the wealth disparity in America is growing, and it's accruing to people like Cam and I. It's not accruing to Gen Z. So there's the problem. Now you have this vehicle called Bitcoin that is inflation proof. It's decentralized. It's not controlled by any bank. It's your money. It's not your hypothetical money that they're holding. And it's borderless, instant payments. It has a fixed supply. Nobody can print this thing. So I think once you understand the problem, you're going, hopefully, if you're intellectually curious, you're going to look for a solution. And this solution pops out. It's just glaring. It's this big bright light that you just can't help going towards. Um, but again, it's understanding the problem, looking for the solution. And as you look for solutions, there aren't many. You're going to have to work your butt off, and you're going to need to save the money you earn in the right vehicle, or it's going to get wilted away out the back door. So that's how I look at it.
I would just add, things are not getting more expensive. Your money is buying less. That's how you need to be thinking about this. The last 100 years is the most productive we have ever been in the history of mankind, and it's been accelerating for the last 100 years. We're about to go vertical with AI. And so the most important thing to understand is the natural state of a free market economy with technology is deflationary. And all that means is that we get better at doing everything, right? We build better engines that are more fuel efficient. We figure out how to pull oil out of the ground in more efficient ways. We create new manufacturing processes that allow us to make, hundreds of things a second, whereas even 50 years ago, it would take, hundreds of seconds to make the thing, right? And it's like, how are prices rising in an environment where our supply chains are being fully optimized? The cost of intelligence now is dropping like a rock. And the answer is um, things are not getting more expensive. We're getting way better at doing all things, and all things should be cheaper every year. And so, um, the sort of nihilistic view that Gen Z has about the world of like nothing ever happens, nothing matters. I've been told my whole life if I do these things, I can get ahead, I can buy a house. Those promises have been stripped away. These are impossibilities now for the 3-year-old coming out of college. AI is coming for entry-level jobs now, and kids in college are like, what is the point? I'm going into a system that I can't win in. And the cause for all of this is we've broken the money, period. Everything on earth is downstream of money. Information is downstream of money. Kinetic warfare is downstream of money. Power, power in and of itself is downstream of money. If you break the money at the top, it impacts everything else in the world. And so all you need to really understand is that money has no intrinsic value. Money shouldn't have intrinsic value. Money is just a mirrored representation of all of the value being created in the world. And so what's happening is, like, you take the US, you have $37.5 trillion in debt. We're adding 2 or 3 trillion a year to that. Okay. It's this massive debt, debt load of interest that we have to pay that's getting bigger every year. On the free market side of the economy, we're like 5% more productive every year. The U.S. economy is like 5% more productive every year. Okay, well, the Fed maintains a 3% inflation rate. Okay, and what you think is, well, they're stealing 3% from us. Okay, well, that's not that bad, right? Well, no, what's actually happening is they're stealing all 5% of the gains that should be manifesting in 5% lower prices each year, plus 3% more, right? And so the reason that they do that is if they allow deflation to rip, if they allow things to get cheaper and money to buy more, that's 37.5 trillion in debt that they have. Each unit of that debt is harder to earn and thus harder to pay back. And so if they allow deflation to rip with this debt load, they're guaranteeing a default. So they're not going to do that, right? They have to inflate the debt away. They have to print more money so that they can pay their debt down, right? And inflate the debt away, like make each unit of debt easier to pay off, not harder. And all Bitcoin is like this life raft, okay? Like, think of the Titanic. We're on the Titanic. We all know it's sinking. It's not plunging into the ocean. It's just sort of slowly sinking. We're like, it's okay. Somebody's going to come and save us, whatever. The dude's on the deck playing the violin, trying to keep people calm, okay? You look off on the horizon, and the Chinese yuan is, their boat's further in the water than we are. So we're not jumping into the icy waters and swimming there. The Russian ruble's further than that. So we're not going over to that boat. The Turkish lira is on the seafloor. So obviously we're not swimming there. Okay. Well, all Bitcoin is this verifiably indestructible boat that just pulled right up next to the Titanic. And it's like, hey, anybody with an internet access can come on board. And a few people are jumping ship and going over, and they're climbing into the presidential suites of this thing. But the second that the handrail of the Titanic goes underwater, and it will, there's nothing that can stop the sinking of the US dollar over the next 10 years, 10, 15, 20 years. Okay. The second the handrail goes under the water, and it may be quicker than that, it's going to be a clamoring. right? It's going to be an all-out clamoring to get off this boat and get onto the thing that can't be inflated. And, that's happened in 51 out of 52 countries that have exceeded 130% debt to GDP have hyperinflated. Okay. The 52nd is Japan. Okay. Which is like being propped up by the US dollar. It will go, the US dollar will go eventually. Bitcoin is just sitting there and saying, hey, there's 21 million, period, for the end of time. And it's the hardest money that's ever been created. And money always flows to the best money. Like if you look at history, there have been a number of world reserve currencies. Every single one has fallen, and the world has repriced into the next best fiat money, and that just happens over and over and over again. So when it happens to Bitcoin, that's just the last time that fiat money will, a fiat world reserve will crumble. It's the final move to a fixed money supply. And what that means is, a lot of Gen Z people are probably the topic of universal basic income is like, well, maybe the government's just going to pay us, some stipend for the rest of our life. Okay. Well, all that means is the government's going to continue to print money and steal all the gains that we produce through human and machine intelligence in the free market. Okay. It just means life's just going to get harder, and you may be getting a stipend, but life's just going to continue. Bitcoin is universal basic ownership. Okay. If you own a little bit of this thing, as we get more efficient in the market, and as these monies realize that their wealth is melting in those monies and they're going to a harder asset, Bitcoin is going to absorb that energy, and that's when the world is repriced in this thing. And all you have to do is own a little bit of it, and every single year as we get better at doing everything, your life gets a little bit easier, right? Like when we go from 5% more productive each year to 10% more productive each year with AI over the next decade. Okay. Well, all you have to do is own some Bitcoin and your life gets 10% easier every year. It's going to be much higher than 10% as this, this hedge moves from fiat dominated to Bitcoin dominated. Bitcoin's growing at about 58% year over year on if you look at it on a 5-year time frame. And there's no other asset on earth that can provide those returns. So in the future, where we are hyper efficient with technologies that are allowing us to do everything for less, all of those gains are going to flow into Bitcoin. And they're going to flow out of these monies that are being systematically debased because they have to. So I guess my message to Gen Z is, yeah, like to Josh's point, the most important thing you can do is focus on the most important problem in the world. And the most important problem in the world is the thing that's upstream of everything else in the world. And we're at the point where AI and Bitcoin are both going mainstream at the same time. It's like this divine gift that was given to humanity to free us of this parasite that is just extracting from us each year. And it is a divine thing. It's like if we had AI and we did not have Bitcoin, that's checkmate for freedom all across the world, because all that means is all the central banks that control the money have more buying power to steal from the people, right? And so if we had Bitcoin and we didn't have AI, you'd have a perfect battery, a perfect infinite capacity battery, but it wouldn't be benefiting from the buying power that AI can create. And so it's like these two things are perfectly dovetailed together. And the fact that they're both coming into the mainstream, in the same handful of years is it's a pretty wonderful thing. So yeah, I'd say do the work. Read a couple books and listen to a couple podcasts and realize you can change your life.
That was put so perfectly. I mean, the Titanic analogy, the battery analogy, it cannot be put more simply than that if you're listening to this. And I will come back to deflation and AI, but let's touch back on Gen Z for just a second here. Josh, you mentioned in your answer to that you've worked with your daughters. And I wanted to ask both of you, what is something that Gen Z can be doing now to secure their future, to maybe start stacking some sats, even if they don't have an income quite yet?
Well, yeah, I think a big concern is that this price has gone to $115,000, $120,000, and everyone says, "Well, I can't afford that, but maybe I could afford some crap coin," and that's going to be a problem for them. That's going to take them further backwards than the fiat dollar takes them backwards. Bitcoin can be purchased at $5 a week. Everyone can earn income at any age, babysit. You have birthday money. You had a summer job. If you've got $50, $100, $1,000, buy it. And you may not understand it fully yet, but once you enter the space, then you've started the path down. So I think you've got to get into it first. I think that if there are parents listening, I think that I think you got to parent this thing simply. You can't try to teach your kids about all of the technology. Bitcoin is very deep, as we all know, but at its base, it's quite simple. It's very, very simple. There's 21 million of them. There'll never be more than that. 19.6 million-ish, I think, have already been made. This thing is very, very scarce. There are 60 million, 65 million millionaires in the world. If every one of them wanted one Bitcoin, they can't have it. So we don't need to be focused on buying a whole Bitcoin day one. We just need to get off zero. And that's my message for the youth of today and anyone, but particularly the youth. If you buy Bitcoin today at any amount, in 10 years, it's going to be worth 10 times that, at least. This thing is going to continue to go up. We are the other thing in this Bitcoin space that I would tell Gen Z is you may feel late, but you're so damn early. You can't imagine how early we are on this journey. So you're actually coming into the workforce. You're going to be earning your money at almost the best time. Of course, 15 years ago was the best time, but now is still a brilliant time to get into this. And as that deck rail of the Titanic that Cam mentioned, we're not there yet. There are not people flocking to this thing yet. There's plenty of room for all newcomers to this.
Only half of 1% of the world owns it.
Yeah, you'll see the world. There's we talk about Bitcoin being the perfect money, and it is. It is certainly a better money than gold. Gold really can't function as a money today. It's appreciating well. It's a decent place to store your money, but for a Gen Z, it's just not feasible, and it will not curate your life going forward like gold. But I just say, as parents, keep it simple. As Gen Z gets started, don't focus like I had to 20% of your time trying to pick Zoom coin or Bing coin or Trump coin or whatever coin. Or do I buy Apple or Nvidia or the S&P 500? I spent thousands of hours working on that. You don't have to. You just need to bust your butt, take the hill. Don't be a nihilist. Cam talked about nihilism. It's my biggest fear. This world is built for you. Go take the damn thing and invest your money in the right place. And the Bitcoin will take care of everything else. Bitcoin literally takes care of everything in your life. If you bust your ass, you take the hill. So my concern with nihilism is the youth, they give up before they even try. Take the damn hill, earn the money, keep it in Bitcoin, and live your life. It'll be fine.
Yeah, and I wanted to ask, because we did talk about parenting a little bit. So what's worked with your daughters? I know you mentioned you had daughters who were around my age, so I think that would be so helpful for a lot of my audience to know.
The best thing I've ever done is I did forced family fun, which isn't fun for anybody but me. But the forced family fun was sitting down and watching Joe Bryan, What's the Problem? And then we've graduated to some podcasts and some just sitting around the couch. And instead of watching some dumb sitcom or even a ball game, we'll sit and watch a 30-minute podcast or a 30-minute YouTube. And I have to sort of pick the material that I believe will be interesting to them. I can't take them down a deep dive on macro or those types of things. But there's tons of content out there. Michael Saylor has hope.com. You can go find your resources and find your 30 minutes of engaging education with your kids. It's quite good family time. It sparks a lot of discussions. And then I encourage my children to, as they're hearing stuff on the street or from their friends, or as I ask them, feed me what you're hearing. I don't know everything. I've got a lot to learn yet. And so they now have a stake in the game and they want to teach their dad a little thing here or there. So make it fun, keep it simple, stay out of the technical weeds.
Yeah, that's great advice. And props to you for doing that with your daughters, because it really does make a big difference. The way I learned as well was through my parents, because they were doing almost the exact same thing where they started me out and my brother out with watching What's the Problem by Joe Bryan back in January. And it's sort of the same thing. Dinner table conversations will always be about Bitcoin. And now that I've started this,
That's awesome.
I like to go talk to people and then I go back to my parents and I'm like, hey, did you know X fact about Bitcoin? And it's like the most proud thing in the world when my parents are like, actually, I didn't know that. Like, that's a good point. I should do some research into that. But
Part of Nicki,
Cam,
also part of why I want people to do something like we did, where we get our kids in, they have ownership in this. They have some of it. Well, that started 4 years ago. Now they're addicted to the number go up technology. Once you've 4x'd your money, you realize you got something. That's why first step, go ahead and buy it. Buy some of it before you truly understand it. Cam went in for 10%. Then he gained conviction. He went to 50. Now I know the guy's insane. Like he doesn't even have a US dollar. So your conviction will grow by owning it if you just get off zero.
yeah, definitely. And something that I've been noticing talking to more people like you guys is it sounds like the price go up, the number go up is what attracts you in the first place. But then once you get into it, you really, really get into it. And it's that conviction that makes you stay through all of the cycles, through all the ups and the downs. And I mean, it's a way of life. So, Cam, do you have any advice for, Gen Z on how we can just make the little things count and put that into Bitcoin?
I mean, I think it's the ultimate cheat code. If you're in your 20s and you feel like there's no way out, and you feel like the American dream is dead for you, and you feel like there's no way that you can separate yourself from this system that feels like it's holding everybody's head under the water. Just know that Gen Z is going to learn about Bitcoin before the boomers. Okay, the boomers are going to be the last to understand this thing. Old dogs are really hard to teach new tricks. The thing about Bitcoin that is so true is that the folks that know most about fiat money have the most to unlearn, because Bitcoin is this, it's a paradigm shift. It is a complete paradigm shift. It goes against everything that schools have taught about why inflation is required, in a growing economy, which is actually true when you have an enormous debt load. Okay, that is actually true, but it's like, it's like peeing on you and saying, "Hey, it's raining." Okay, they're stripping your life away from you. They're stripping your time away from you, in order to avoid the default of their own debt. And Bitcoin just represents this thing at 23. If you learn about what this thing is, your life gets easier every year. Your friends' lives are going to get harder every year. That's a guarantee. Bitcoin allows your life to get easier every year. Now, I'll tell you, it's not easy to hold Bitcoin. In the short term, it is super volatile. You have to be able to withstand, 15x upside okay, and hang on to it. And then you got to slide back down, 50% off the backside, okay? It's so difficult. And then like the day-to-day holding is difficult. Even for somebody that's been in it for 10 years, it's still painful to look at it, because once you understand what this thing is, it's like seeing, it's like witnessing an event that only you see, and then being super frustrated that everybody else in your life hasn't seen it. And so you're sitting there like, it's maddening in the moment to realize, how are these people not seeing this thing? It's like one of these things, like when you get to the point where you've gone down the checklist, if you understand that governments can't ban it, they can only ban themselves from it. When you understand the mechanics of how this thing works, and you check off, all of those core risk factors, it's like you become like a religious zealot. Like I felt like I went through a period of time where almost every single person that I talked to, I felt like a vegetarian or something. Like I just like had to tell them, like, it's like, oh yeah, what's up? My name's Cam. Yeah, do you know anything about Bitcoin? I got to tell you about Bitcoin. And it became this, like almost this like unhealthy measure of, it was an obligation that I felt. It's like people need to understand what's coming, and now more than ever, every day at Brickyard I look at technology companies. Every one of these companies is building with AI. Okay, we are entering into a world where we have flat screen TV level deflation across almost every category. We're talking legal, we're talking accounting, we're talking consulting, we're talking every major industry on earth is going to have the ability to do way more with way less. And all that does is it puts more deflationary pressure on the fiat money, which guarantees that these banks are going to print more money. And it's like, it's not what I think Bitcoin's going to do. It's what I know fiat will do. And if I know what fiat is going to do, then I know what's going to happen to Bitcoin. And I guess the last thing I would say for your generation on the shitcoin side, everybody has to go through it. And I'm not even going to tell y'all to not do it, because you will. You'll be like, I'm late to Bitcoin. I'm going to go dabble in Fartcoin and Dogecoin and Solana and Ethereum, and it's better technology. It's got more utility, etc. It's all, just take it from me. I've been there. I've canoed down the Amazon rainforest. Okay, I've taken arrows. I have bought these things. I've I've done the work to understand what is the real technological evolution happening. Like, what is crypto? There is only one crypto. There is Bitcoin, and then there's everything else that's going to go to zero against it. But many of you are going to have to learn the hard way, and that's just that's you kind of have to earn your stripes. There's a term in Bitcoin that's, you get Bitcoin at the price you deserve, and you have to do the work. And very, very few of you are just going to say, you know what, I'm going to take Cam's word for it. I'm going to go straight into Bitcoin. I'm not going to get lured into the casino over here. Like, I'm going to make it all up. I'm going to, pile into this one thing, and then I'll go into Bitcoin. Okay. It never happens.
Not how it works.
It's not how it works. And, I'll tell you, on the professional side, I know a lot of fund managers that focus on crypto and venture capital. Funny enough, venture capital is almost entirely focused on shitcoins, because Bitcoin doesn't serve them. A shitcoin you can print out of thin air, you can airdrop, you can create however many tokens, you can grant the founders of the business however many tokens, and then dump the rest on retail. Okay, you can't do that with Bitcoin. And so venture capital just completely ignores it. But you get some of these crypto fund managers in a room, okay? Like, they'll get up. This happened countless times. I watch a crypto fund manager get up on stage with a microphone, and they're talking about all the exciting things happening with Solana and Ethereum and yada yada. Okay, and then afterwards at the dinner, I get a little one-on-one time with them, and I say, "Do you really believe that?" And they start off the conversation like, "Yeah, the scalability of this is so much greater than Bitcoin, this and that." And you start asking questions like, well, what can you actually do with it? You can trade meme coins. Okay, yeah, it's got higher throughput right now to be able to facilitate these microtransactions. um, and preserve the casino. Like crypto's utility is preserving the ecosystem of shitcoins. You keep pressing on them, and you get to the point where they finally lean over in the conversation and they say, "Listen, I'm trading shitcoins because I want more Bitcoin." And it's like, "Thank you," and that's how the conversation always ends.
I
It's
just
when you
needed to hear you.
really get
I just needed to hear you say it. I've had the same thing. Yeah. Just that they will start to defend why they're doing what they're doing, but they're doing it to make fiat money that they can convert into Bitcoin. That's the whole game. There are far, far more of them than there are people that actually believe in shitcoins.
true.
Great advice. And if you're listening to this, I couldn't have put it into clearer words. So do what you got to do. It's your rite of passage. But back to the system. So the system is basically leaking value, as we talked about with, inflation and the money printing that's going on. As Cam said, the dollar is getting you less and less every year. So your paycheck is losing power. But we also talked about another twist. We talked about deflation and we talked about AI. Everyone is saying that it's going to bring, massive productivity and deflation, but there's a lot of people who are still apprehensive about AI. And this could be because they think that it's going to come for their jobs, it's going to increase the wealth disparity, or, it's not ethical, or it takes a lot of energy. But it sounds like you guys have really bold takes on this. So, what does AI mean for Gen Z's jobs and Gen Z's future?
I mean, I would say AI is absolutely coming for everybody's job. There's absolutely no doubt about it. You know, fund managers are not going to have jobs in the next 5 to 10 years. You know, every fund manager today is already using AI tools to diligence all their companies, write all their LP updates. Once agentic AI becomes really usable, and we're still super early in the evolution of agents, but in the next couple of years, you're gonna have the ability to spin up, 50 or 100 or 1,000 employees that are doing different things that work around the clock for you. And they never say no, and they never disagree with you, and they never don't show up for work, and they can operate just like everybody else, every human, sitting in front of a laptop operates on the internet. And so jobs are not safe. That's the unfortunate reality of this thing. This is a genie that cannot be put back in the bottle. Now, the silver lining is it's going to open up an incredible amount of opportunity for people to start things and be owners of armies of agents. Okay, to create value. And if you're young and you are able to take risks, it may be a good thing that you don't have, you're not pegged down to a mortgage, and you don't have a ton of dependents, and you can take risks to say, I always wanted to create this thing. Well, the barrier to entry to create that thing is now super low, right? What that also means is competition is going to be super high. But you're going to have the tools to create value like you never could before. Like, I'm so jealous of these companies building in Brickyard. They're using AI because, in my day, I feel like the guy that talks about, having to run away from Indians on the, through 4 feet of snow on the way to school every day. When I say, when we wanted to create a new, feature, we had to submit a ticket to our developers. It would have to make it into the product roadmap. The developers would eventually get to it. It would take them weeks to push the thing, and then you'd have to QA it, and then you'd finally push it, and then it wouldn't work exactly as you thought it would, and so you'd have, like, all this is now just being done. QA is like fully automated now, and code is no longer manually written. Like, Y Combinator is the top accelerator in the world. 1 year ago, they surveyed the batch, and they said, they asked, what percentage of your code has been written by AI? I think it was 18 months ago. It was 5%. Okay. Well, they just surveyed this batch. It's like 98%. Okay. So script is being written by machines now, and engineers are kind of these technicians overseeing the script, right? It's like almost like pilots back in the day used to hand fly an airplane. Well, like pilots on an airline, not hand flying from LA to New York, you know, they're managing a system. And so there will be a change. And I don't know what that looks like. And that's another reason why I'm so drawn to Bitcoin, because I can't see the future. Okay. I don't know how the market is going to ingest you know, a huge rise in unemployment, right? I don't understand which companies are going to be the winners in a category, because, you know, investors used to feel like they could see 10 years in the future. Well, like now we can only see like 3 months in the future. You know, like the hottest AI platforms, the best, most powerful AI platforms go from being the best to like obsolete in like a quarter. And so how do you invest in that? You invest in the right people. Who are the right people that are going to be able to navigate this changing game board? And you invest in the right asset. And the asset that's going to benefit completely from deflation is the thing that cannot be printed. It's the single scarcest thing on planet Earth that you can hold in your head. That's accessible for anybody in the world as long as you have an internet access. Um, and that is hope. That is, Bitcoin is hope. It's the world is changing so fast, it's anxiety inducing. Okay, for me as a 39-year-old, I'm like, my God, what is the world going to look like in 10 years? Okay, as a 20-year-old, you're like, you know, what what is the world going to look like in 30 years, 40 years, 50 years? How am I going to make a living in 40 years? Right? Like, what does the job market even look like? And the hope in all of this is we have the answer for what is happening. AI is a poison for debt. We know what it's going to do. You can't stop it. And so how do you exit a debt-based system for a system that has no debt? And I think that's the most important thing that anybody can be thinking about right now.
Nicki, Cam has certainly more technical and real life experience with AI, and he's building a lot with AI within Brickyard. For me, I view AI as taking away tasks that you didn't want to do anyways. You didn't really want to be a paralegal. You didn't really want to sit at that desk as a junior accountant for 10 years coming out of college. You were going to do that to make fiat money. Well, now you can take a higher order job. The AI is smart, but it is a long way from being as smart as a human being at sort of interpreting real world things. And I think that I think there are opportunities for higher order jobs. There will be tremendous opportunities in the trades. I know it's not a great thing to talk to Gen Zs about. A lot of parents in my family and in my friend network don't want me preaching on this, but look, if you're not going to be a rocket scientist, if you're not going to be an engineer, then it's okay to take a trade. The world needs a lot more carpenters, electricians. There's a lot of AI infrastructure being built. There are jobs. The job market is not ending. You just have an opportunity to do a much more fulfilling job. And what Cam is pointing to, I agree with. It's what I talk to my daughters about. Start something, build something. It's easier today than it ever has been. And the other thing that you have to do as a young person is you must know how to interact with these AIs. You must know you don't have to be a program engineer anymore. I write my own programs. I build my own web apps. I can do it all myself, and I don't know how to write 1 ounce of code. So you need to learn it and use it to your advantage. Don't get run over by it. It's not a given that AI is going to run you over. There's plenty of opportunity out there to do far more fulfilling things than many of these career paths initially would have sent you on.
It's really funny that you talk about writing code because, you know, that's my degree, and a lot of the people I'm friends with, that's their degrees as well. So we consistently see, and we talk to people, we see the need for our jobs just going away. But from what you both have said, it sounds like entrepreneurship is almost like the light at the end of the tunnel, or AI allows for a lot more of us to be able to pursue the things that we actually want to pursue. So, what does what does Bitcoin and AI mean for entrepreneurship? And Cam, I know you over at Brickyard, you're seeing lots of different tech startups. So, what are some of the things that you're seeing?
We invest in a wide array of different companies. We backed a defense tech company that's building counter drone solutions for the Department of Homeland Security and SEAL Team 6. We've backed Deep Tech Tools, that a company that sold to NVIDIA called Brev. We've backed companies that are just pure SaaS plays. We're interested in everything. We look for a very specific type of person. Our view is the investor heyday of being able to spend all their time thinking about the future and having a good understanding of how to invest on a 10 to 12 year time frame is kind of coming to an end. If you are underwriting pre-seed stage, super early stage companies based on a business model and whatever biases you have against what you've seen in the past or where you think the market's going to go, you might get lucky, but you're not going to be right. Almost 100% of the companies that we back at pre-seed, within a year, if you look at our investment memo that we write whenever we do an investment, we've actually stopped doing individual investment memos for this reason. Almost 100% of the investment memos that we write within 365 days are completely irrelevant because the founders have changed or pivoted or tweaked who their customer is or what their product is doing. The game board is just changing so fast, and so what we choose to invest in are people. We look for almost borderline neurotic, possessed, completely obsessed people that want to solve a big problem and have a cardinal direction that they're going in. The company has to check venture boxes. Like if we invest in this company and it goes like we think it will, could this return our entire fund on this one check alone? Like we have to check these boxes. Those are like prerequisites to doing a deal. 95% of our diligence is this founder capable of going to war for a decade in a super fast changing environment where they have to make sunk cost decisions and turn around on false summits immediately and sprint back down to the bottom and burn up a bunch of work that they've spent months working on so they can sprint up the next hill. The complexity of finding product market fit is increasing, and so the only investable thing, in our opinion, is are you investing in the types of people that can do that, right? And that's what we look for. So we're based in Chattanooga, Tennessee, which is the 120th biggest city in the country. We invest $300,000 to $400,000 in every investment that we make. We've written 49 checks into companies from all over the country. Only one is actually from Tennessee. If we write a check in your team, you're moving to a black site to join 20 other companies who all came here on the same mission to just remove all distraction from your life and focus every watt of your energy on getting to product market fit with your company. And it's a super lonely process. Like as a founder, your parents don't understand what you're going through. Your friends don't understand what you're going through. Your siblings don't. The only people that really can understand, the pressures of venture-backed founder or other founders under that same pressure, and being around a bunch of others in a time of suffering makes it easier. And so that's what Brickyard's for. It's like a house of suffering for a bunch of super ambitious, high IQ individuals that are super focused on what they're doing, and they're only thinking about one thing.
When you go to the Brickyard website, the literal first thing that you see is in big letters, it says "for the maniacs." So what makes a maniac founder?
It's an it factor. It's founders have to be incredibly self-motivated. They have to be deeply curious. They have to have huge visions, and those delusional visions that they have actually have to make sense in their head. They have to be delusional enough to go against all odds. The odds in startups are super low, and the math never works out. Super smart people shy away from startups in a lot of cases because the math doesn't math. You know, um, you have this delusional optimism that you're going to go up against Goliath and win, and so you're really looking for somebody that you understand is unkillable on their own merit. And what I mean by that is a lot of our founders are not going to succeed, but it won't be from a lack of doing everything possible with the information that they had at the time. And you're looking for folks that Mark Andreessen, who's the founder of Andreessen Horowitz, actually went on a pod recently. This is actually great. They're like, how do you make decisions on really early stage founders? It's like, well, we kind of treat them like homicide investigations. We just start asking them questions that get more complex each time. And he's like, so where were you last night? Oh, you're at the movies. What movie did you see? Cool. What'd you get at the concession stand? All right. Where'd you sit? Okay. Who was the main character? Right? How'd the movie end? Where'd you go after? Did you stop for gas on the way home? Like, you start asking these questions about a company, and the best founders, you can never get to the end of their knowledge. Like, they just keep kicking out answers, right? And many times those answers are not right. They're assumptions that they're making, but they are they're convicted assumptions. Like, one of the best things that founders can do is this saying, have strong convictions, but hold on to them loosely. And that's what being a founder is. It's like, you have to be like, we are going there. And you get there and you're like, okay, we're going there, right? You have to just completely focus on and commit until you get information that changes your mind. And the second you get new information that changes your mind, you have to just completely shift. And that's what a great founder is. If you get there and you're like, oh, we've worked so hard to get here, like, let's just keep ramming this square peg through a round hole, like, we're going to make it work. Like, it's not just about working hard. You have to be extremely hardworking and very low ego. And what I mean by that is you're not going to be right. However you think that this is going to play out, it's not going to play out how you think. And so when you get to that fork in the road and you realize, okay, that leads to a dead end, you have to just immediately shift and go in a new direction. And the thing that kills companies is they linger on those false summits, and time kills. And that's how companies die. And so founders are just, they're maniac, high RPM machines that are super agile and are willing to do whatever it takes to win.
So it sounds like you're betting, almost entirely on the maniacs and not on the hype at all. And the only thing that this reminds me of is Bitcoin's proof of work mindset. I mean, it just seems like your values align almost completely with Bitcoin's. So how does Bitcoin fit in the VC model? Do you think that more Bitcoin adoption as we move forward globally, it means a completely different model in terms of VC?
Yeah, I think VC is going to be in for a rude awakening when they actually understand what money is. I think many of them, the incentives just aren't aligned in venture capital today for them to pay attention to the other side of the coin. They're focused on one side of the coin. Like, you think about companies, I like to think about it like a nuclear reactor that creates electricity. Okay, they're totally focused on creating nuclear reactors. They want to make electricity, right? They want to build companies. Okay, well, they don't realize there's a problem with the money. So I know that it doesn't matter how much electricity you create if you're storing that electricity in a battery that leaks 8 to 10% a year, right? They aren't concerned with that yet, but they will be when they understand, because they're going to want their companies to start operating with a Bitcoin mindset. And what I mean by that is when I'll tell a quick story. Like, my wife and I had, after I'd done the work on Bitcoin, we had like a slush fund of cash that we hadn't really allocated for anything. And we're like, well, we're going to redo our house and we're going to get some things that we want. And we're just going to like let this thing just go down to zero. And once it's gone, right? We worked really hard for a decade, and treat yourself, right? Well, the second that was gone, all right, now my wife is now thinking like a Bitcoiner. She's like, do I want those new pairs of shoes? Do I want Bitcoin more, right? Your hurdle rate with Bitcoin is a 60% CAGR asset. And when you have to think about allocating capital with an asset that grows at 60% a year, it makes it a lot harder for you to make errant purchases, right? And if you're a company operator, okay, let's say you have a Bitcoiner as a CEO, and somebody in the company says, I got the best idea, we got to go do this thing, okay? Well, how good of an idea is it? Is it 60% a year good? Right? No? Okay. Well, yeah, we're not doing that thing, right? Because we're just going to sit on Bitcoin. And what that means is it changes capital allocation all the way down to the individual consumer. Like it starts with the company operators, like how you're actually thinking about putting capital to work. It makes you way smarter. And venture capitalists are going to realize, like, the best capital allocators are the ones that are the best fiduciaries of money, right? And so I think in the next 10 years, venture capital is going to change in a big way when LPs, the investors in investors, right? Like, we run Brickyard, we have LPs that gave us their money, we invest their money, right? Well, LPs are going to understand Bitcoin before the GPs. Okay, so I'm a GP in Brickyard. I spend my time looking for nuclear power plants, right? Well, our LPs, they've got money in all kinds of different things. They've got it in equities, they've got it in bonds, they've got it in gold, they've got it in this and that. Okay, well, once they realize that their hurdle rate is 60%, well, now when a VC pitches them and says, hey, my IRR is 20% in our last fund, or 30% or whatever, they're going to be like, okay, well, I hold Bitcoin, so how are you going to beat Bitcoin? If I give you Bitcoin, are you going to give me more Bitcoin back 10 years later, right? Like, that's the new hurdle rate. LPs are going to realize that the S&P 500 growing at 7 or 8% a year, that's not the hurdle rate. It's this thing over here that's growing at 60% a year.
Nicki, that's me. Cam knows I'm not super prolific, but I have a number of private investments. Most all of them happened prior to Bitcoin. And now I continue to get all the pitches to be in private equity, VC, fund to startup. Boy, is it really hard for me to get involved in anything. And so Cam knows my answer is almost always going to be no, because unless I can see a path to 60% returns annually, why would I take this risk? I just don't need the risk when I've got the best money in the world that returns 60%. It's like buying real estate. Real estate used to sound like a good investment. Today, it's just dumb. You're just stupid if you buy real estate, because you have all the taxes, all the liability, you have everything to deal with. And it's still not going to be, you're not going to get a 60% or 30% return on real estate. You just put your money in Bitcoin and let it do all the work.
Let me make one point, because I think another thing that Gen Zers are thinking a lot about is like buying a house, right? Like, why is it so damn expensive to buy a house? Well, I'll tell you why. Okay. When I was in high school, my parents saved cash. Like, they had savings accounts, right? And if they didn't have a good idea, they just sat on cash until they saw a good investment opportunity. Okay. Well, no one saves in cash anymore. No one. Zero. Okay. And so instead of saving in cash, like anytime you come into any liquidity, like a real estate project pays out, or you get a pay raise or whatever, okay, and you're sitting on any amount of cash, you are in a hurry to get rid of it. You're in a hurry to redeploy that thing, okay? And what has happened in the housing market, you ask, like, why are houses so expensive? Houses are not more expensive because the houses are providing any more utility than they did before. What's happened is we broke the money, and people are looking for a better store of value, and they're thinking, okay, what do I put it in? Well, I'll put it in a house, and I can rent the house out, and it'll cash flow, and the value of the house will grow, and I'll get some cash flow from it, right? And so people with assets are buying up the houses. And so that's what's driving, that's the demand that's going into the housing market, when really the only people that should buy houses are people that want a roof over their head, right? A house should be valued at its utility value. It shouldn't be valued for any purpose of store of value. And what Bitcoin's going to do is it's going to demonetize housing. It's going to make houses cheaper because you don't have to buy a house that you have to maintain, and you have to make sure it doesn't get mold and termites, and you don't have to pay property taxes on it. And you don't have to be a landlord, etc. And so people are going to move that capital outside of houses once they realize you've got this perfect store of value over here. And it's going to do the same for bonds, and it's going to do the same for commodities. It's going to do the same for equities. And so when you think about, am I late to this thing? Just remember, half of 1% of the world owns Bitcoin. So you're super early. Okay. And number two, it's a $2 trillion asset, which is massive. Okay. We're not talking about like a little startup. Okay. This is an absolutely mega asset class. But that doesn't mean that this thing doesn't get massive. Like if you look at all the value in the world, okay, it's like $900 trillion. Okay. Well, Bitcoin's TAM is $900 trillion. It's all the monies, it's all the real estate, it's all the equities. That's like the total possible TAM. Obviously, people are going to put money in real estate and so maybe it's half that. Maybe it's like 450 trillion. Okay. But 10 years from now, in today's buying power, the total asset value of the world isn't going to be 900 trillion because we're going to be creating way more stuff. Okay. In today's buying power, it's going to be like 2, 3, 4, 5 quadrillion. All right. And so it's all of that divided by 21 million. And that's the TAM, right? Maybe all of that divided by 2 divided by 21 million. And that's the TAM, right? And so this isn't something that is like, it's not the casino, you're not going to 100x in a year, but it forces fiduciary responsibility and long-term thinking. And that's what I think, folks coming out of college today should be thinking about is, I'm 20, I'm going to be a producer for the next 30 years. And I want to start stacking the thing that's going to benefit from all these other things that are happening in the world, so that my life gets easier every year.
Just last question to wrap things up here, and I like to ask every single guest that I have this question. If there was one book, podcast, any resource that you could recommend to someone starting out learning about Bitcoin, what is it that you would recommend?
For me, it would be What's the Problem from Joe Bryan. For me, as I believe the most important book was The Bitcoin Standard by Saifedean. But I think when you talk about starting, What's the Problem, I believe is a great place to start. And then I think that on your journey, you must read The Bitcoin Standard. It is for me, it's the foundation of everything that sent me down every other rabbit hole. And I think he's just a genius. And he wrote that book quite some time ago. And still, everything in it is still absolutely relevant today.
Nicki, have you seen the Jack Mallers speech that he gave a couple months ago?
The one at BTC, was it Prague?
I think so.
I know what you're talking about.
He was speaking to Gen Z. That's probably the best, 40 minutes that anybody can spend listening to somebody, because it's, Jack's like, how old's Jack? Like 28?
Yeah.
And he can really speak to this generation in the way that he can articulate what's happening is pretty profound. So I'd watch that on YouTube. Jack Mallers is at Bitcoin Prague recently. And then I'd watch like 3 podcasts with Jeff Booth, like just YouTube Jeff Booth, and pick like the 3 most watched podcasts of Jeff with Jeff. And if you get through 3 of Jeff's podcasts without having a light bulb moment of I need to pay attention to this thing, I think there might not be much going on upstairs. I mean, it's he is probably.
Maybe this just isn't for you.
You deserve Bitcoin. I just don't know when you're going to get it.
That's right.
Yeah, that's what I would say.
Awesome. I'm going to link every single one of the resources that they mentioned in the description and add cards to What's the Problem and Jack Mallers' speech at BTC Prague. So here's my takeaway, guys. Gen Z is stepping into a world where our money is leaking value, as Cam said. And obviously, AI is going to be taking up jobs because that's what happens when new technology comes into the world. We've seen this with the Industrial Revolution. We saw this with the introduction of the internet. And the old financial system is breaking apart. As we are now with Orange Peel, we should know this. We've seen a lot on inflation, a lot on why money printing is bad. But Bitcoin gives us a tool that, our parents and older generations never really had. And Cam shows us that, the future belongs to the maniacs who build with conviction, who build what they want to build and won't stop. We saw that, adoption is generational, and Josh did a great job at explaining this. Josh did an amazing job at explaining what parents can do. So if you're a parent and you're watching this, what you can do to help Orange Pill your kids, your, nieces and nephews, your neighbors, whatever Gen Z you know in your life. I just want to remind everyone that, sometimes the best thing that you can do is just inspire, so whether you're coding in the lab, like me and a lot of my classmates are studying finance and econ, or, maybe you're blue collar and maybe you decided you don't want to go to college at all, just find what you're going to be maniacal for and stack sats while you do it because you need a money that is going to work in your favor. So, guys, thank you so much for coming on. And if there's anyone in the audience that wants to, get in touch or ask some questions, is there somewhere that they can find you guys?
I'm on X. That's my social media.
Same. Yeah, Cam Doody on X. It's probably the best place. I'm on LinkedIn every now and again, but it's getting pretty cringe. So
I'm at Josh McNeil.
All right. I will link both of those profiles in the description and put their handles on the screen. Thank you guys so much for coming on. Again, I had a lot of fun peeling everything back. And if you're watching this, stay skeptical, stay curious, and stay orange-pilled. I'm your host, Nicki, and I'm going to see you next time.